Good day, everyone. Today we are going to explore Nokia's strategic adaptation in the telecom industry. Nokia's a well-known name in the global telecom field has a lot to share about its journey and strategies. Let's take a quick look at what we'll cover today. We'll start with Nokia's strategic transformation, then move on to an overview of the telecom industry. After that, we'll analyze Nokia's market position, its strategic initiatives, and the key factor influencing its development. We also apply economist theories to understand its situation better and finally draw conclusions about its strategic implications. Nokia is a global leader in the telecom equipment industry with a history of over 150 years. It has witnessed and contributed to the development of the telecom industry from the early days of mobile phones to the current 5G era. In 2014, Nokia made a significant strategic shift. It sold its mobile phones business to Microsoft and focused on network infrastructure and service. This decision allowed Nokia to concentrate its resources on high-growth areas like 5G and IoT. In 2023, Nokia reported net sales of €22.26 billion, with its network business playing a major role. It has a strong presence in Europe, North America, and Asia, always focused on innovation and keeping customers satisfied. The global telecom equipment market is an oligopolistic one, dominated by a new major players such as Nokia, Huawei, and Ericsson. These companies compete fiercely in terms of technology, market share, and customer service. The telecom industry is characterized by rapid technological changes. To keep up, companies need to invest heavily in research and development. Nokia, for example, spent billions of euros annually on research and development in areas like 5G, IoT, and cloud networking. Also, the industry is highly regulated. Organizations like the ITU set standards and trade policies, such as the US-China trade war, can greatly impact market dynamics. Globalization has expanded telecom markets worldwide. Companies rely on the global supply chain for components and manufacturing, making the industry highly interconnected and the increased demand for high-speed internet, IoT devices, and smart city solutions is driving the need for advanced telecom infrastructure. Emerging markets are particularly important for future growth, as the demand for connectivity is rising there. Additionally, the race for 5G penetration is a key driver, and the transition from 4G to 5G has brought new opportunities for innovation and market growth. Nokia is headquartered in Espoo, Finland, and has a global presence in over 130 countries. It has manufacturing centers in India, Vietnam, and other strategic locations. In the global telecom equipment market, Nokia is among the top 3 players. It holds a 20% market share in Europe and North America, competing facilitatively with Huawei and Ericsson, each having their own unique strengths. Nokia's core competitiveness lies in 6 extensive 5G partners, profitably with over 20,000 patents. and its significant research and development investment, which was 4.9 billion euros in 2023. It's well known for its innovative network solutions and a strong brand reputation. Since 2014, Nokia has focused on network infrastructure divesting non-core business. It continuously invested in research and development to stay ahead in 5G and IoT technologies and collaborates with leading tech firms like Microsoft, Google, and Vodafone. Moreover, Nokia is committed to sustainability. Its model-based station reduce waste, eco-waste, and has issued green bonds to fund eco-friendly projects aiming for carbon neutrality by 2030. Let's analyze Nokia's using Porter's 5-force model. Nokia depends on key suppliers like TSMC for semiconductor companies components. The limited numbers of semiconductor suppliers give them significant bargaining power, which may pose risk to Nokia's supply chain. Major telecom operators like Verizon and Vodafone have high bargaining power because of their large scale purchase. They can negotiate pricing and serving terms, affecting Nokia's profitability. The telecom equipment market is high competitive. Huawei's low-cost strategy gives it a 35% market share in Asia, leading to intense price competition. Ericsson's investment in open RAN technology markets is more competitive, forcing Nokia's difference through innovation. Emerging technologies such as cloud networking and satellite communication are potential threats to traditional telecom infrastructures. Nokia is responding by working with Microsoft and Google to develop new solutions. The telecom industry has high entry barriers due to high research and development costs, complex technology requirements, and extensive patents. Portfolio Nokia's 20,000 and 5G patents and strategic alliance with Ericsson and Qualcomm further strengthens its position against new entrants. Let's use the pastel analysis to understand Nokia's opportunities and threats politicals. The U.S. CHIPS and Science Act and nearshoring incentives in the EU and Mexico are opportunities for Nokia. However, fragmented 5G standards and anti-multiplier investigations in Europe and threats. Economically, India's 5G rollout, Southeast Asia's digital economy growth, and new financial models offer opportunities, but European telecom opportunities reduce their spending and weak euro are threats. Remote work, socially remote work, smart cities, and rural connectivity projects are beneficial. However, concerns about data privacy and the shortage of 5G engineers in emerging markets are challenged. Technologically, Nokia's AI platform and 6G research and development are advantages. But China's investment in quantum communication and Nokia's reliance on TSMC are risks. Environmentally, the EU's carbon border tax and Nokia's energy efficient solution are positive, yet compliance with EU's eco-design director and climate-related disruptions and problems. Legally, Nokia's patents bring in money and cross-license agreements reduce risk, but IPR lawsuits and US export control are obstacles. Ability to adapt and innovate is a key dynamic capability. We can see this from its 2014 business divestiture and focus on 5G and research and development. The company continuously adjusts its resources to respond to market changes and technological advancements. Nokia's tangible assets like its global manufacturing centers providing a strong production base, its intangible assets, such as its brand and extensive patent portfolio, are crucial for maintaining its competitive advantage. Nokia's strategic decisions are guided by its dynamic capabilities and the resource-based view. This ensures its long-term success as it makes use of its strengths while adapting to new market conditions and technological trends. Nokia invests heavily in 5G research development, allocating 20% of its revenue to this area. Its 5G networks are developed in over 100 countries, which drives market expansion. By focusing on cloud and IoT, Nokia diversifies its offering. Its partnership with Microsoft and Google help in integrated ecosystem enable it to offer more comprehensive solutions. This research development leadership is crucial for Nokia to stay competitive in the fast-evolving telecom industry. Partnerships with Microsoft and Google are not only for ecosystem integration, but also for driving innovation. Through these collaborations, Nokia can reach more markets and offer more advantageous services. Moreover, strategic alliances with companies like AT&T and Vodafone expand Nokia's market presence. Joint projects with these partners enhance customer satisfaction and loyalty, strengthening Nokia's position in the market. Nokia continuously innovated and optimized its products to strengthen its position in the network infrastructure market. It holds a 40% market share in network infrastructure, which brings stable revenue and profit by leveraging its telecom expertise. Nokia expands into new business areas, enhance its market competitiveness. It has established manufacturing sites in India and Africa to enhance its market response speed and customer satisfaction. These localization strategies increase market presentation and brand influence, helping Nokia gain advantage in emerging markets and promoting continuous business development. Nokia also continuously innovated and optimized products to consolidate its global market position. Translation of 5G technology to industry applications is a key trend, with smart factories and automated ports leading the way. Nokia is at the forefront of developing 5G solutions for these applications, driving industry transformation. The development of 6G and other future technologies will shape the next phase of the telecom industry. Nokia is actively involved in research and development for these technologies to maintain its leadership position. Continuous innovation is crucial for Nokia to stay ahead in the rapid evolving telecom landscape. It invests in emerging technologies like AI, IoT, and quantum computing to enhance its products offering. The US and China trade war has a significant impact on supply chains. Traffic or import quota between the two countries may increase Nokia's component procurement cost of export cost, affecting supply chain efficiency. Trade agreements like a regional comprehensive economic partnership or the United States-Mexico-Canada argument bring Nokia advantages such as traffic retention or simplified customer produce, but they also affect its market entry strategy in Europe. Greater compliance is crucial, and Nokia ensures data privacy and security. It also faces spectrum license challenges in key markets and collaborates with regulators to secure license. Nokia's modular-based station reduced eco-waste by 30%, contributing to environmental sustainability. The company is also investing in renewable energy and energy efficient technologies. Sustainability is a key part of Nokia's corporate responsible strategy, focused on social and environmental impact. It aims to achieve carbon neutrality by 2030, setting a benchmark for the industry. Nokia has issued green bonds worth €500 million to fund eco-friendly projects. These innovations help reduce the company's carbon footprint and promote sustainable practices. Ability to deal with geopolitical challenges and diversity in supply chain is essential for maintaining market access. Its strategic partnership and collaborations are effective in addressing this challenge. Nokia's strong 5G partners portfolio and continuous research and development investment are key to maintaining its technological edge. Its ability to adopt new technology and market trends is crucial for long-term success. Nokia's strategy is guided by economic sectors like economies of scale and dynamic capabilities. These sectors help making information decisions and optimizing resource allocation. Standardization of open RAN technology brings both risk and operation opportunities for Nokia. The company needs to actively participate in standard setting to ensure its solutions remain competitive. The risk for 6G and development is already on, with major players investing heavily. Nokia must stay ahead in this race to maintaining its leadership position in the future telecom market. The telecom industry is subject to market volatility due to technological change and geopolitical factors, Nokia needs to remain agile and adaptable to navigate this challenge and seize new opportunities. Guardian principle is innovated in disruption, collaborate in competition. By leveraging its strategies and adapting to changes, Nokia can continue to thrive in the dynamic telecom industry. We look forward to seeing Nokia's further development and contribute to the telecom industry in the future. Thank you for listening. Have a good time.